Hi everyone, my name is Rishid. Today is the 9th of November 2025 and today I'm going to be going over my weekly prediction for gold. As usual, I'll be going over the monthly, weekly, and finally the daily charts, and then I'll switch over to my Excel. We'll go over the final overall prediction based on the analysis we gathered from these three time frames, right? But before getting into the video, it's important to make the disclaimer that all information here is completely educational, and therefore it is important to conduct your own analysis, whatever analysis that may be, to ensure that you're comfortable with the risk, reward, and trading style, since you may not be with mine. Okay? But with that out of the way, let's get into this video. Right? So, monthly charts, we can see gold has been on a massive uptrend, especially that has ramped up in the last year. We see there was a minor consolidation here for a span of around 4 months, and then we broke 5 months. Then we broke out of that quite dramatically. We see this was a huge candle. More importantly, though, we see volume backing up this entire trend. We see even in this last month, there was obviously, it was a very volatile candle. We see it actually went up to $4,381.5 US dollars, and it actually crashed down to 4,002. Right, so very volatile month. However, this month is also getting very interesting because of the recent economic job data, which is sort of taking the stock market for a turn here. And this is where gold comes in, as an historic inflation hedge, as typically what's considered a safe haven asset. You would expect that gold would remain stable and or actually be an asset that people would flock to at a time of economic uncertainty like this, right? So we see, though we can't make those immediate predictions off of the monthly charts, let's sort of here move into the weekly. Weekly charts, we can look at it in a little more detail. We saw that huge run up, and the large wick that we saw in the monthly candle came from largely these 2 weeks here. So we see these 2 weeks in alone have crashed the market, gold maybe around 5%, and on relatively high volume as well. However, this recent week, despite the very disheartening job data, gold has managed to actually tick up. So this is very interesting because all the other asset classes are losing value, and this is again where gold comes in as sort of a historic safe haven asset, and we see people flocking to it at a time of economic uncertainty and on relatively high volume as well. Definitely lower than the previous 2 weeks. These might have been like consolidation or sort of closing out positions on gold sort of trades, which is why the gold price ticked lower. So yeah, this is what we get from the weekly charts. Finally, moving on to the daily charts, we can see this even in more detail. We see that this sort of 2-week crash, and then more importantly, when we get to this candle here, at the start of the previous week, we see how gold definitely tanked for 1 day. However, it recovered very quickly and sort of held stable after that. This is in sort of stark contrast to the other asset classes like Bitcoin and stocks, where you're seeing crashes throughout the week and maybe the last candle is ticking upwards. Not the case with gold. Gold remains stable. So yeah, that's all it is for this video. We can see that the RSI is declining, MACD is negative. It is true, of course, in the daily scheme. We can see how prices have declined, so they are momentum indicators at the end of the day. But yeah, that's all for this video. Thank you for watching. Enjoy, and I'll see you in the next one.